Hey guys. Hey guys. This is Dr. Greg McLeod. We are going to be sharing our screen. Doing using a simulator right now. The simulator is something we use in order to practice a strategy and get really good at it. And the great thing about using a trade simulator is that you don't have to have the market. Right now, the market is, the trading desks are closed. You know, the market really never, ever closes. We say it closes, but literally the markets run every single day, 7 days a week, 24 hours a day. It's the trading desks which close. You know, they're open Monday through Friday. Sometimes they'll let you trade weekends with Bitcoin, but even all markets continue running 24 hours a day, 7 days a week. You just don't have access to them. And in fact, banking day is still, tradable in the Middle East, right? So, but since you don't have access to the market, you want to hone your skills. Using a simulator like this one I'm going to show you is quite helpful, and it can enhance your trading ability, right? So let me go ahead and want to share my screen. I'm going to share this screen, and this is a so this is like Forex tester like simulator, and we're using our template here for the and so we're going to take 10 pips out of this trade. I'm getting long gold right now, and we'll see if we can pick up what we just did. So we just picked up another quick 10 pips. Well, 100 pips. Well, 100 gold, 10 pips in Forex is 100 pips in gold. So, there's another $100, right? And so, we can enter buys in the simulator. And right now the market, like I said, the market is closed. This is a simulator. And so we just made another, each arrow, each triangle, each blue arrow is where I enter the trade, and the yellow is my exit. And so you can see that, and I'm using a 2 time frame analysis. I have a 4-hour and a 1-hour chart side by side. You can use, when you're trading live, you can use any 2 time frames, which are at least a factor of 4 or 5 different time frames. So this is a 4 and a 1 hour. You could use a daily and a weekly. If you want to wait that long, you can use a 5-minute and a 1 minute. As long as you use 2 time frames, that is the key. Okay, so this is the King Midas template, and we have an RSI, a couple moving averages, and a PSAR. And the rules are quite easy to follow. So basically we're looking for for trades that are moving in the proper direction. And so let's say if we can get a short trade here, and that we did, we just picked up another $100 right there, right? And every time I press the button, I basically advance the market by 1 hour. Like, of course, if you were trading this live, you would have to wait an hour for each candle to form. So it would take a little bit longer. But the thing about it is, if you have a strategy that you can follow, a blueprint, it's like baking cookies. It's a recipe, and you just follow the recipe, and whatever the recipe has you to do, you do it, right? So if we were to get short, okay, and so there we go, we exited the trade and we made another $100, right? And so we were growing the account. We started off with a $10,000 account, and we just start hitting the trades in, following the pattern, the sequence of events, right? Following our rules. And those rules can be found in the Gold Rush Blueprint, which is available, for a limited time only. But here is another, we're just waiting for another setup, waiting for a price to line up for our setup. And so we have 12, and then there we go. We entered here. The red arrows are short. Our exit is gold. and we made another $100, right? $1 a pip, we're trading one standard lot, and the lot in gold, one lot is equal to 100 ounces, of gold. And so here we go. So, we can enter a trade, and we can look for our entry signals to get into the trade. We're just waiting for a possible entry, right? And we're just, right now it's kind of flatlining and not really doing anything, right? So maybe we can go. We got a little bit of a break to the south side, and then there we go. The fluctuation. We're just looking for the fluctuation in the gold market. And even though it was moving in a sideways range, almost like a $3 range, we were able to pull up. We're able to pull out, $100 a trade. We're up almost 26% on this. As we've been playing this. Again, this is a simulated historical data, right? And this is the long-term, the 4-hour chart, and we can actually see that we are actually in a constructively. We have a rising trend line there. We also are in a longer-term bearish channel here. Again, we are looking at historical data from August 29th, 2018. Okay. I don't remember what the price, I know these prices were kind of low back then. And then we got a nice little break south. Let's see if it continues for us. And then we picked up another $100 right there, right? Higher time frame chart kind of told us we got a breakout south side, so we would probably look for a continuation of the downward trend. We could probably try to gather another short maybe, right? And we just picked up another $100. So you can see that we just picked up another $100. Why? Because we're looking at the higher time frame as our trade bias, and that's one of the key things I'm showing here with any of the systems that we teach at the Elite Traders University is looking at the higher time frame chart. The higher time frame chart dictates where price is going to go. Now, we can do some counter trend trades because we're just grabbing 100 pips in gold is basically like 10 pips in the Forex, right? And so we see a little wick. So we usually have long wicks. We usually see a little bit of a retrace, right? And we got a little bit of a retrace, right? And so we've got a retrace. So maybe we can sell the retrace, right? And then boom, we got out of that with another $100. And me could have gotten a few more hundreds out of there, but we can see that we are. And then we're going to be looking at some support levels coming in here too. We can go back to our higher time frame chart, our 4-hour chart. We can also go ahead and click here. We can see this level of support that was, we still use, even though we have a system, we've got to have an operational framework of what's going on in the market. There's Fibonacci people looking at stuff, right? We have a long wick. We probably should see a little bit of a rebound from this area because we have this. So we can just press F12, right? Yeah, see, we got a rebound. I wouldn't trade the rebound, right? But we can see if it continues. We got a rally in a uptrend, right? And we can go and see if we can get another boom. And then we picked up another $121. We got slipped. We got some positive slippage there, which is pretty good to have positive slippage. Even you can have some negative slippage. I had some negative slippage too when I had some positive slippage, but I got some negative slippage. I got a couple of negatives, but I've got some positive slippage here where I was going for 100 pips, which is 10 pips Forex. And I got slipped $63. So that slippage in my favor because my take profit is locked, but I got filled at a better price, right? And so I got filled at a better price here. That's called positive slippage. And why? Because we're in a barreling downtrend, and now we're getting a little bit of a support there. So I'm just kind of like, we teach the nuances of like how to, like, why am I entering and where am I exiting and what do these lines mean, right? And so, why am I not taking trades at certain areas? Maybe I go ahead and hit that. I got short. Let's see if it's, and that's okay. So that we're now we've probably got a bullish trend. We didn't quite get back to our take profit zone, right? And so we can actually look at the lower time frame is still above the higher time frame. Red is above. So you're just wondering, yeah, we got this little pop there. So he's wondering if this is going to head back down and fill. We have a gap, and we get a gap fill. Maybe that's what we're looking for on our next candle. Let's see if that happens, or do we keep? Yeah, so that was maybe our gap fill, and right, and so now we have our, maybe we can draw a trend line across that, and if we get back, right, we can probably hit it for a second one, and then boom, we got both out of those, right? And then we have some old support, and we're breaking down to some lows here. We have some old support coming in here at about the 1189 area, and we could probably hit that for a short, right? And you could probably hit it for more than one, or actually make our take profit a bit bigger. But and then okay, and so we've got a rally against the downtrend and another candle there. And let's say if we can grab maybe 200 on this trade, right? Put a 2 in there, and let's see if we can sell it and see if we can get down to the maybe 1189 area. Let's see if that works out. And we did, okay. And so we picked up $200 right there. It's like, well, how do you know that? Well, those are the kinds of things that we've got some bearish crosses. We have negative PSR, PSR. We probably maybe get another shot short. Let's see if we can take that short. And then we got it. So, okay, we picked up another 2. Oh, we got some positive slippage there too. 221.12, right? And so we just keep doing this, and you can see we started with $10,000, a $10,000 account, and then we worked it all the way up to 13,872, so about 38% return, right? On this account, right? And then we can see that maybe we've got some consolidation there, and maybe we get another. We can draw trend lines and things like that. We're still in a bearish scenario, and I see price going back down to 1182, right? I'd like to see a reaction. We like to see reaction against the trend. See, that's the bullish reaction against the trend. And then we want to see maybe a comparable bearish reaction, bring us back down. And let's see that's our reaction. And then let's see, boom, and that's it, right? And we picked up another $200. Seemed like we'd get some positive slippage, but we didn't get any positive. And we're already up 40% in this account. So 40% so far in this. Again, this is a simulation, not a demo, but a simulation, which allows us to not have to wait hours and hours for a candle to form. We're using what we call the King Midas strategy. And that's a strategy that's found within our Gold Rush Blueprint. Gold Rush Blueprint is our new course that I'm really excited about getting you guys involved in and signing up for. We're going to do a special launch. You might have gotten an email. If you haven't gotten one, you can DM me directly and get access to this wonderful, wonderful course where we're basically making cash on demand using this specific strategy, right? And so we can just look for certain key areas that we can actually we can try to get short here again. We'll be and right. So then we get our trend line across here, right? And we're going to just we'll wait for a break before we get a nice break. And right. right? So we've got a nice layer of support that is forming right here, right? We have this beautiful layer of support that has been holding and holding on, but it looks like it may want to give out, because eventually we would probably see a retest or a break. That's the other alternative count, is that we would see a break above 1211, and that would be pretty neat too. But let's see if we can pick up another 10 pips. And then we did another 200 pips this time. Oh, okay, 14,768, right? And we're still below our areas of resistance, and maybe we can grab another 200 pips there. And then we did. We grabbed another 200. That takes us to 1498.68. We're at support. We might get a bounce here. So, getting short here could be a mistake. We have a gap that needs to be filled on the higher time frame right in here, right? So these are kind of things that people get really super excited and they want to get short again. And usually we get some type of a rebound, right? And so you might get a rebound. Right, and we did. Right, we get that rebound at support. See, I drew that old line of support. So we're going to teach you about support and resistance and how these areas of support, we saw price gap down. Now price is going to fill the gap. And then, so there we go. We are gap filled. And so we're 51% on this account. Now I can continue doing this back and forth using this strategy, but you should pretty much get the idea that when you have a strategy and you have a plan, you can make consistent gains, especially in a pair like gold. And it really doesn't matter what time of the year it is, we can do that. And I can go ahead and press stop, and we can see we made 5,125. We can actually analyze this and bring up the analysis. We press the analyze button. It takes us to our area here, and it'll do a full analysis of the okay. So we can see the balance we started with. We started with $10,000, and then we can see you can see the growth of the account, and that's what you want to do. You want to have a consistent, steady growth of your account with not a lot of drawdown. Okay, drawdown is when the price goes against you, and you can see that my drawdown was null. There's no drawdown. 100% trade wins. People say, "Wow, that's fantastic, Greg." It's like, but we teach our students how to do it too. Is one thing that I can do it because I've been doing it for 30 years, and I've worked for one of the largest banks and one of the largest Forex broker dealers in the world. And with currency analysts, currency strategists, and trained people, got a doctorate degree in Christian business and leadership. And but the average person can do it too. So don't think that just because I have all these accolades that this is unique to me. But I have students from all over the world, from different situations and backgrounds and educations and races and languages that can do similar, if not better, results than this. And so that's good news for you. So if you have tried before and hasn't worked out, then having a system, a strategy, having a coach and a mentor to show you, and having that practice, that's very important. Many people go into trading as a quick fix, and they don't practice. And it's just like if a football player, or basketball player, or baseball player, if they don't go to spring training camp or training camp, performance is usually not that good when they play in a real game. And the announcers even say, well, he missed practice, he missed training camp because he held out for more money in his contract, so he didn't participate in training camp, he didn't participate. And then, so yeah, he gets the big money, and now he's in training camp, and now he sucks, right? Because he didn't train. So sometimes players will train on their own while they're negotiating their contract, but they miss working with the group. and being tested and tried and supported by the group of players. And so even though they may have all the gyms and all the private facilities that they can work out on their own while they're negotiating their contract, they are not part of a group. They're not part of the team, not working out, training, being challenged by the team. And so therefore, even though they may be in great shape compared to us, the average person, but compared to their relative to their group and to other players in the NFL or Major League Baseball, they're not conditioned to the same level, and it shows in their performance. So individual traders who go out there and they don't work with a mentor and work with a group that is focused on trading, they're akin to those players that think they can do it on their own. And a lot of times, like, you're going to watch TV, you're going to get a snack, you're going to go out to go for a walk, you're going to play some video games. You're probably not going to be focused at your training and giving it that full discipline if you were not in a professional environment that's demanding, that has a schedule, that has a curriculum for you to become the professional trader you want to be, right? So this is where our performance going here. 51.3% return, 39.7 if we did this as a monthly return, and you try compounding that, it's tremendous. Weekly return, 8.3%. And that's typical for our students, even though those are simulation. They do 5 to 10% per week. And so, compounding that, even taking a small account of $1,000 or $500 and being able to get 8%, 5 to 8% per week compounding is tremendous. In fact, if you ever went to one of these Forex calculators, these compound Forex calculators here, right? If you've ever been to one of those, and you can come out. And so let's say you start off with $1,000, right? And then you compound it. They say we're compounding at like 8% per week, right? So we can put weekly and put 8%. Well, right? If you do that for 12 months, and then we calculate it and compound. Well, if you got to take out weekends and stuff like that, but that's $35,000 in a year, which is, it's not too shabby, right? May not be enough to live off of, but if you have a job and you can do this part-time and you're making it $1,000 a year, well, now you're in the $100,000 a year part-time just by adding this strategy to your weekly. Is for and they did it for maybe like for 2 years, right? I mean, they did something like that here, and come out in debt $500,000, right? But being able to go into being able to compound that 8%, you can turn it into 1.2. That's the power. But you can't compound unless you have a good system. You can't have a good system that you can follow unless you have the training to follow it. And so that's what we offer at Elite Traders University. So if you like the video, make sure you like it, subscribe if this is on Facebook, and then you can actually and share it. Come on, we're in the Gold Rush Blueprint is what we're talking about here. See if we can bring that up. Computer is it's Sunday, so the computer is kind of like, working good. You can go here and we can go to the inner circle, goldrushblueprint.com, right? And the new Gold Rush is here. And this is like Kentucky Fried Chicken. We just do chicken. We're not really going to be doing Forex. We're going to be focusing on gold. A lot of things are going on where with the advent of the digital dollar, digital checking accounts, and the whole digital, the central bank currency, the central bank backed currency, that if they take the dollar out of the mix and start doing things with it, we want to find something else to trade, something that moves and that's fast and that's still accessible. And gold, gold and commodities like gold and oil and silver are things that can be traded as well if the dollar is taken out of the commission, right? So that's why I've, and the central banks are accumulating gold. We saw gold hitting an all-time high, near $2,143. That's an all-time historic high, right? You can actually, I can pull up the chart on that, right? And we can go ahead and pull that up. And we hit this high in gold, and it was the highest high ever recorded in gold. And here it is. That's it, right? We hit $2,148.48, and we pulled back. So we're getting some type of a little bit of correction, but we could see more highs, right, as the dollar starts to fall. And we can see this is the gold chart, and that's the historic all-time high. Never been this price ever in the history of mankind. Serious, right? Maybe if you want to go back, trading will take you all the way back to the 1800s, right? We go back, we go on a monthly chart, and we can go back to 1837, and gold was $23.46 an ounce back in we probably weren't around there. It's 1863 right there, right? So so this is the all-time ever high for gold, and we are uptrending, right? We're not going anywhere. Other currencies, they've been toying around in the same area for a really long time. You look at the DXY, right? We can go back. We go back to 1967, but we've been between 73 and 164 for close to 40 years. We have not gone anywhere, and we can see that the dollar is actually falling. Right, we had some higher highs and higher lows, and now we had a high of like 115 and 106. Now we're like 103.57, and the dollar is poised to go much lower, right? We are making lower highs and lower lows from that high we had back in 1982, right? And we're just making these. We're in a constructively downtrend. And when the Fed starts cutting rates, we could probably see a retest of support near that 7106 area. What does that mean? Means that the dollar cannot buy as much. There's going to be higher inflation, and the BRICS nations, Brazil, Russia, India, China, and South Africa, they are stockpiling gold, right? Where they're stockpiling gold, they got they're stockpiling tons and tons of gold, and by doing that, they are looking at they're looking at the amount of backing a currency backed by gold, right? So you look at China gold reserves, and you can see that they are just stacking gold. They've been stacking it, for breaking out in 2023, moving away from U.S. Treasuries and stacking gold. Why? Because they're preparing for the new central bank, their currency, the global currency that's going to be backed by gold. That's going to involve the BRICS nations, and it's going to be without the U.S. dollar, right? And that way they can facilitate trade exchange between countries like China and Russia, and being able to be able to buy and sell without using the U.S. dollar, right? And so this is Russian gold reserves, and you can see that those gold reserves have been stacking up, especially after the Ukraine war, right? And so we can see these major countries in the BRICS nations coming together to form to accumulate stockpiling. This is India's stockpiling gold versus their stockpile of US dollars, right? So we have this huge buildup, which is creating this demand for gold as we even look at the CFTC. If you want to look, if you want to look at the I'm trying to pull up the CFTC report here on gold, right? Yeah, and then we can look at metals. We can look at the precious metals, and we can look at the precious ones. We can look at gold, right? And then we can look at the tremendously. This is the gold COT report. COT stands for the Commitment of Traders Report, and we can see that there's a huge demand for gold every week. That's been increasing, right? And so this is the managed money that's actually getting long gold. The dealers are selling gold to people, and other reportables are getting long gold too. Producers are producing gold and selling it, right? So the orange is selling, red, blue is buying, but the managed money, they're accumulating, and they're not selling, they're accumulating. So with all this background here, that's why it's very important to learn how to trade that shiny metal. And it's a little bit different than Forex, a little bit different than stocks. And that's why I created the Gold Rush Blueprint. I created a great book, some modules, and a membership site, so you can be kept abreast of what's going on and what influences and impacts the gold price, and how we can flip gold over and over again to create income, which we can use to either invest and buy physical gold or to invest in other things. Okay. With this, I'm going to wrap this up. Go ahead and click the link if you want to be part of this gold revolution and live a golden life. So let's gold. All right. Talk to you later. Dr. Greg McLeod of the Elite Traders University signing out. All right.